Are you seeking a bridge loan for commercial property purchase or refinance and want to avoid having to do a formal appraisal? In this video, I'm going to explain a few things to consider when avoiding appraisals and how to find lenders that never require a formal appraisal. I'm Butani, CEO of PrivateLenderLink.com, where investors and brokers can find direct, private, and hard money lending companies throughout the United States. If you're in the investment real estate business and want to gain insights into private mortgage lending, be sure to subscribe to our channel and get notified every time we release a new video. When property owners and mortgage brokers reach out to us to ask for lender recommendations, many prefer lenders that don't require an appraisal. The reasons for this are obvious. It's time and money. Commercial property appraisals can cost thousands of dollars and take 2 to 3 weeks to produce. The cost and the schedule can vary depending on the property type, the property size, and just how busy appraisers are in that particular market at that particular time. If you find a bridge lender that doesn't require an appraisal, it will likely save you time, but it may not always save you money. In commercial real estate finance, it's very common for lenders to collect some sort of payment when the term sheet is signed to cover due diligence costs. This may be structured as a deposit where the majority of the funds are going to be used to actual hard costs, and whatever's left over will be applied to closing costs or origination fees. The deposit amount typically ranges from $2,000 to $10,000, and it could be higher for more complex deals, loans that include multiple properties, or larger loan amounts over $10 million. Once the deposit is paid, there's a solid commitment from the borrower, and the lender is ready to get to work right away. One quick note about deposits and due diligence. Even lenders that do require formal appraisal will still typically collect a deposit to cover due diligence costs in commercial real estate finance deals. The appraisal fee may be included in that deposit so that the lender pays the appraiser instead of the borrower paying the appraiser directly, which is more customary in residential investment deals. I'll make a separate video to cover due diligence fees in detail. When the lender does their own in-house valuation, it takes a lot of time and resources, especially for commercial property loans over $1 million. See, there's more to the valuation process than just crunching numbers and researching. The lender has to do a site visit, and if the lender's not local, you may end up paying for an airline ticket, a rental car, meals, and maybe a hotel room. Even if the lender is local to the property, they'll likely charge you for travel costs and their time. I've seen some cases where a lender will hire a third-party inspection service in lieu of them doing a site visit themselves, but that is not very common. Some lenders that do their own in-house valuation may still reach out to a local real estate office to get a broker price opinion, and that's another expense to the borrower. If you can find a lender that's within a 1 to 2 hour drive of the property, that may save you on some due diligence costs, but then you also have to consider the pricing for that loan. Maybe a national lender would offer better pricing than the local lender, but the due diligence costs are higher. For those of you who are adamant about working with a lender that doesn't require an appraisal, I want to mention one possible scenario that could open up your mind about getting a formal appraisal. Lenders that do their own in-house valuation may be more conservative on the value than an appraiser. You may be sure that the value of the property is within a certain range, and then the lender comes up with a number that's way lower just because they want to be more conservative. If that happens, you may find yourself in a tough position. Here's a sample scenario I've seen. You find a lender that doesn't require an appraisal, you explain the loan request and provide all the information about your financial strength, including a list of all the assets you own. The lender provides a term sheet, everything looks good, so you sign it and pay a deposit. Then the lender takes the time to visit the property and completes their in-house valuation. But the value is way lower than what you expected. To make up for the difference, the lender will require you to bring additional cash to the closing, or they'll ask you to pledge one of your other investment properties as additional collateral. By this time, the lender knows which of your other properties has sufficient equity, and they may ask to take a second lien position on one or more of them just to strengthen their position. This is a great strategy for the lender, but what if you're not okay with putting a second lien on your other property? By this time, you've already spent money and several days working with that lender. And now you have to make a tough decision of whether to move forward and pledge the additional collateral or start from scratch with another lender that will require you to pay for a formal appraisal. And hopefully that appraisal will come in at a value that's closer to what you were expecting. So the point I'm trying to make is don't just write off lenders that require a formal appraisal. Avoiding an appraisal may not be the best decision. When using our website, PrivateLenderLink.com, you can save a lot of time when searching for lenders that don't require appraisals. Once you've done a search for your state or metro area and you see a list of lenders, look for the Refined Results section on the left and then click Show Advanced Filters. One of the last fields is Appraisal for Commercial. Click that, select Never, and then click Apply. Now, if you don't see never on the list, it's because all the lenders in that search will require an appraisal. I put a link to the commercial bridge lenders page in the description below, and you can also do a search straight from the homepage. Just select commercial bridge from the loan type list and then enter a state or major metro area and click the search button. If you found this video to be helpful, please click the like button below and be sure to check out our other videos about commercial real estate bridge lending. Thanks for watching, and I look forward to seeing you in the next video.